Hello, everybody, and welcome. My name is Erica Belay, and I am a mortgage loan officer with Best Life Mortgage Corporation. I'd like to thank you if you are joining me live, or if you're watching this in a recording. Welcome. This this training session is really designed for realtors. Tonight I'm going to talk about some non-QM loan programs and how we can use those non-QM programs to attract higher end clients. And what I mean by higher end clients, just higher price point, bigger purchases. So just to talk a little bit about me, I live in Kyle, Texas. I was born and raised in New Braunfels, so I am from Texas. And I focus most of my business from the San Antonio to Austin markets, anywhere in between. But really, I can do business anywhere in the state of Texas. And I have some realtor partners who are in other towns, such as Victoria and some other towns outside of this area. It's the beauty of being able to work remotely. But I can do loans anywhere in the state of Texas. I am looking to build some partnerships with a few more realtors inside of my VIP partnership program. My company, Best Life Mortgage, provides a lot of resources for my realtor partners rather than just doing your loans for you. We want to help you grow your business as well, because helping you grow your business helps me grow my business. And so I would love to connect with some more realtors. So if you're interested after watching this video and you're interested in hearing more about that partnership program, I'd love to connect with you. Best Life Mortgage is a brokerage. We have access to about 20 different lenders, I think. So I can shop for the best products to meet the needs of your clients. I can do just about any type of loan. And so I can be a one-stop shop for your clients. And as a realtor, you want to have as much control over your transactions as possible. So having that go-to lender that you can just trust to do almost every type of loan for you is just a really good resource for you to have. So anyway, without further ado, I am going to get into this presentation. Let me change my screen here so you can see my slides. So understanding non-QM loan programs so that we can attract higher end clients. So would you rather have a client that uses FHA or conventional financing? Of course, most of the time you're inclined to want conventional. Even though FHA is a great loan product, it sometimes does have a stigma. And so as a realtor, you typically say, oh, I want the conventional loan. Well, is your work versus reward unbalanced with too many transactions that give too little payoff? Do you want freedom money that allows you to spend more time doing the things you love with family, friends, going on vacation, enjoying your hobbies? Do you want to build a solid foundation for your business to continue to grow and have a high quality network that attracts the right kind of clients? Typically, these are all reasons why sometimes we would rather serve a client with conventional financing instead of FHA financing. But what if there's a better client than FHA and conventional? At least one that's usually associated with larger transactions. I love all of my clients. I want to serve as many clients as possible, but you know that with the higher price clients, higher price purchase prices means bigger commissions, right? So we reap what we sow. The next question we must be willing to ask ourselves is, what kind of clients are being attracted with our service, marketing, and the professionals that we already partner with? The type of loans that our buyers use will attract the quality of client that is referred to us. FHA and basic conventional loan programs will attract clients that are low, mid, and some upper mid quality clients. So what about higher quality clients? How do you attract them? No matter if you're a seller's or a buyer's agent or both. What is the answer? It's found in the offers that you are presenting to your clients and the lending financing that your buyers bring to the table. So I don't know if you can see this pre-approval letter, but that's a sales price of $820,000. So I'm referring to a specific type of clients that are business owners, self-employed, and 1099 contractors. These types of buyers are becoming even more prevalent now with the rise of at-home work popularity, right? A lot of small business startups, a lot of these things. So these types of buyers at times have unconventional financing needs. So we need to present solutions to their problems that may be keeping them from more traditional financing that you're used to. Of course, these solutions need to be reliable and stable financing options. With the type of financing that we're able to provide, this is how we're able to serve the client that you see in this pre-approval letter that's a sales price of $820,000, a loan amount of $697,000, and a down payment of $123,000. The national average for a home purchase using a conventional home loan is around $370,000. With a real estate commission of up to 3%, this equates to around $11,000 in commission. So if you have splits with your broker, you're looking at anywhere from $5,500 to $11,000 commission on an average home sale, which is still pretty nice. But the real estate commission of 3% for a home that sells for $820,000, as the example in the pre-approval letter from the previous slide, that equates up to a commission of $24,600. So you can do a lot less transactions and make a lot more money. Your local business owner and your self-employed borrowers write off a huge portion of their income for business expenses, or they haven't done their taxes yet. So according to FHA and conventional guidelines, this will exclude them from traditional loan programs, where we would need 2 years of their most recent tax returns, and we use the income that is left after everything else is written off to qualify them for the mortgage. So instead of using $150,000+ a year, we can only qualify them for far less than that. They may have bank accounts full of assets, solid credit, and stable income, but because of the guidelines and because of what is reported on income taxes, we can't approve them for this $820,000 purchase price using conventional financing. So what do? We either leave them out to dry for another 2 years to stop writing off all their income taxes and get caught up on taxes. We approve them for way less and waste your time showing homes that don't fit their homeownership goals. Or we utilize a stable and reliable lender financing and approve them for that $820,000 purchase price. And then you help them find the right real estate property. So just to give you an example, I have a client that I've been working with who on their income tax returns, because of the write-offs, only showed about $60,000 of income. But using a bank statement program, we were able to show $250,000 of income. Now, the house that this client would get qualified for on traditional income tax return financing is a lot less than a house that this client's going to qualify for using the bank statement program. So that's just one example. So if you don't know what constitutes a non-QM, QM stands for qualified mortgage. So it's a loan program that doesn't meet the outlined agency standard requirements by the CFPB, this Consumer Financial Protection Bureau. So the Consumer Financial Protection Bureau has created a qualified mortgage, and this is what most conventional loans, FHA, VA, USDA, agency loans fall under qualified mortgages. So the types of loans that I'm talking about are non-QM. And there are definitely reasons for the agency standards. They also severely limit who can receive financing to buy a home. So the types of loan programs that I'm talking about are things such as what I was just talking about before, a bank statement loan. We've got some 1099 programs that just look at your 1099s, not at your income tax returns. We got some programs that are called debt service coverage loan programs, which are loan programs that really are there for investors, where the house and the appraisal, the rental appraisal, if the rental appraisal comes in higher than the loan amount, than the monthly loan amount, then it qualifies. But the borrower does have to have the down payment and the credit score. And then we even have some no income, no debt documentation loan programs. So these programs might sound a little bit intimidating or even scary, but here's why you want to work with these clients. They typically have assets totaling up to 10 to 20% of the purchase price. So these programs are not for your clients who need down payment assistance. These are for clients who have the assets. They usually have the debt to income ratio that isn't even an issue or a factor. So they have plenty of income to cover the debts and the debt to, so we can usually go up to a debt to income ratio of about 50%, but this usually isn't even a factor for the type of clients that we're targeting with these non-QM products. And then there can be less need for documents, and close times are similar to conventional loan programs. Now, this kind of depends on the program. The different investors that invest in these types of loans are still going to require documentation. It's just different kinds of documentation than what is required for the agency loans. So, for instance, a bank statement program, we could do 12 months of bank statements or 24 months of bank statements, where we evaluate just the deposits that are going into those bank accounts as income. With the no doc and with the debt service coverage loans, those don't require as much documentation. But this is where you want to have a trusted lender that can walk your clients through these processes and help them through it. But really, the turn times and the closing times are not much different than a conventional loan. And ultimately, in this market right now, the only thing that I've seen holding us up is appraisers. So we can get these closed typically in about 30 to 45 days, depending on the appraisal. So comparing this to the more traditional programs like FHA and conventional that can require no funds at closing times, and that have guidelines for work history, stable income. But a telltale sign that a client may be ready to be a homeowner is their liquidity of their assets they have put away. Having assets of 20% or more doesn't happen just by chance. So by putting into practice habits that promote financial stability, this is the type of client that uses our non-QM loans. So hopefully, now that you understand why a non-QM client can be a desirable client to serve, they are often financially stable. They are ready to buy a home. They could be buying multiple real estate properties, possibly a second home, possibly rental properties. They have enough assets, and the loan programs aren't subject to the same kind of restrictions that our conventional loan programs are. So how do we attract these clients? We need to be willing to tell all of your prospects and your sphere of influence about these financing options as a great start. For this, you can utilize some of the resources that I have, such as program flyers. So if we partner, I can share some program flyers with you to attract these clients. We want to share all about this type of financing on social media to connect with these types of clients. And then you want to connect with these types of clients in your local community groups. But when you start doing loans and doing sales, real estate transactions for these types of clients, high-end clients like this are going to also network with other high-end clients. And so you're going to get these referrals. So essentially, the more people that you know, the more people that know what you do and what you're good at and the services that you provide, the greater the increase your chances of attracting these types of clients that you want to work with. So that's pretty much the gist of it. If you want help in marketing to some of these clients and doing some co-branding with some of these flyers to reach out to some of these types of clients, please reach out to me. Let me put my contact information up there. There you go. My cell phone number is 210-279-4392. You could also reach me at ericabelay@bestlifemortgage.com. Or you can shoot me a private direct message through, whether you're watching this on Facebook or on LinkedIn. I think we're streaming on LinkedIn. You can send me a direct message, but I would just love to help you attract some of these higher end clients. Thank you so much for tuning in. Have a great one.